Let's get right into it. I plan to put $100,000 into NIO stock. Let me tell you why. I think this thing is about to explode and make a lot of money and have a big run up because I can see momentum is about to break out. Specifically, if I take a look at the chart, you will notice a few things here. So first of all, NIO is under $10 per share. Second of all, it is below its moving average of $9.33. Back in December, this was a $13 stock. In the past 5 years, this stock was over $57 per share. If you notice what happened, basically, NIO has crashed down and has gone lower and lower and lower. And yes, this is a falling knife. But at some point, you have to pick it up, and I am so confident that I am going to put $100,000 out of my $2 million portfolio. This represents a 5% position of my portfolio in NIO stock. When I did my research on NIO, when I first bought it for just $4, I saw it as a very big growth story. Since then, it has had a journey to over $50 per share and now back under $10. So we really need to talk about this stock because I think it's about to make a lot of money for investors. So if NIO goes up to $20 per share like I expect, that would be a 250% gain. And guys, NIO is likely to do this. What you need to realize is that China needs NIO to succeed. They are very competitive and they want to see a homegrown electric vehicle company succeed over something like Tesla. It's clear China will be helping NIO succeed, giving it an unfair advantage. It's also clear NIO knows how to target the most lucrative market segment. But it's not just luxury segment. I believe NIO is going to dominate, hence why I'm putting $100,000 into NIO stock, and I'm going to ride this stock up to $20 per share. In the past 3 months, NIO is down 26.33%. That is a quarter off the price tag, basically 25% off. And when you see this at the store, you jump for this. But investors are not jumping on NIO for some reason. And I believe this is a misunderstanding of the stock and where it's headed. Now, in terms of investing in NIO versus other EV companies, I am positive it's in the top 2. It is difficult to say whether NIO is better than Tesla, as it ultimately depends on the future. But both companies are leaders in the EV industry and are constantly working to improve their products and operations. At these valuations, it makes sense to dollar cost average and acquire shares for the long term. As an investor in NIO, I am not deterred by the company's Q1 deliveries falling short of its midpoint guidance. In fact, I believe that the disappointment is already reflected in the company's slashed estimates and low stock price. NIO is facing the challenge of achieving its ambitious target of 250,000 deliveries for 2023, making its second half execution critical to its 2023 performance. And that's what I'm bullish on. I'm going to hold NIO shares for the rest of 2023. Now, in addition to NIO, I'm obviously diversified. I have other Chinese companies as well, like Alibaba. And on Alibaba, I have made a lot of money. Here's my Alibaba position. I have 6% of my portfolio in Alibaba, 1,000 shares for about $89,000. I'm currently up $6,000, and I also have options on Alibaba. If we scroll down to my history, I've also made a lot of money by selling options on Alibaba. For example, just $3,600 in the past week on Alibaba. I'm very confident in China, and I like NIO a lot. I also like Alibaba a lot. The reason why is because the fundamentals are very good for NIO. In fact, if I show you the fundamentals, they are more attractive than any other stock that I see on the market in this space. There are many EV companies, there's Li Auto, and there's many others, but for me, NIO and Tesla are the top 2. Tesla because it's an American company, and NIO because of the fundamentals and the technicals and where I see the vision headed, especially with the CEO William Lai being at the front. Now take a look at this. The price to sales ratio is just 2. That means you're paying 2 times more than sales. This is a very cheap price. For example, Apple is over 6, Tesla's over 7. So this is trading at 1/3 of the price to sales ratio that a company like this should be trading in. To me, that means that this company could be 3 times more expensive. Hence the $24 per share price target. And if you take that $24 price target and you discount it by about 20% for a margin of safety, Warren Buffett always talks about this, then you basically get a $20 per share stock. If you want more updates on NIO and other high growth stocks, make sure to subscribe with notifications on this channel. Thanks for watching. Would you rather miss out on getting NIO at the bottom or end up buying Tesla at the very top? Let us know in the comment section below.